John Nather, gold has been orbiting $1,700 an ounce all week. People keep looking to Ben Bernanke, they're looking to Europe. But what about India? Shouldn't we be getting more buying from India this season?
Indeed, we ought to be because basically between now and about a month from now, this whole auspicious period for buying gold will expire. And India, of course, has been facing some physical demand woes pretty much all year long. So what we have to look for is some pickup in physical demand, certainly along the jewelry lines as well, because China and India would have to drive that market. Otherwise, investment demand will have to pick up the slack. And of course, most of that took place before QE3, as we saw with the funds. I'm afraid the funds, as we head into the next 2 months, might uh, possibly take profits and do, year-end window dressing. So this could threaten prices. We saw a dip under 1700 on the day when the FOMC announcement came out. So not all is well, but there's support in the mid 1600s at the moment.
Well, the pundits keep saying that the magic of Ben Bernanke's QE3 announcement seems to be wearing off, not just for gold, but for the stock market as well. What do you make of it? What do you think of what you heard this week?
It's pretty much true. I think a lot of the buildup, prior to QE3 was perhaps overdone, and we saw a load up across asset class, sectors. But all that said and done, we're still looking at a year where the S&P has outperformed every other asset class with a better than 15% gain, and gold is somewhere in the 10 to 11% range. It is wearing off to some degree, and I think people are now focusing on perhaps the next big event, which would be the fiscal cliff come January. So, in that respect, and of course, in that context of year-end window dressing, I think we could have some further sell-offs, before it's all said and done.